Good afternoon, and thank you for joining us today. My name is David Talbot, Managing Director and Head of Research here at Red Cloud Securities, and I'm delighted to host a Red Cloud webinar on gold today. We are going to hear from Pancon Resources Management, Clayton Loft, President and CEO. Now, during today's webinar, he will provide an overview and outlook on the company. Then we will take some questions, so you can type your questions into the chat box at any time, and we'll get to as many as we can. But before we kick things off, first we need to discuss the fine print. During this Pan-Continental webinar, forward-looking statements may be made. I would direct listeners to their forward-looking statements outlined on page 2 of its corporate presentation, and that can be found on the company's website, panconresources.com. For Red Cloud Securities, I'd highlight that this webinar is for information purposes only. It should not be considered a solicitation or recommendation to buy or sell securities. We note that this call does not consider the particular situation or needs of individual investors, and participants should rely on their own investigation and seek their own professional advice before investing. Please see our most recent research located on the Red Cloud website for specific disclosures on Pan-Continental. So with that said, Leighton, why don't I kick it off to you to start your discussion?
Good afternoon, David. Thank you so much for that introduction. All right, I see the presentations up on the screen. I want to wish a warm hello to everyone joining this webinar. I'm very excited to be here. As David said, my name is Leighton Croft. I'm the president and the CEO of Pan-Continental Resources. We go by Pancon for short. David mentioned our website, panconresources.com. On the Toronto Venture Stock Exchange, PUC is our ticker symbol. On the OTCQB Stock Exchange, our ticker symbol is PUCCF. So I am here in Charlotte, North Carolina. It's a gorgeous day. The Carolinas, we are the home of the Carolina Slate Belt, the first gold discovered in all of North America in the late 1700s. We are on a very prolific belt full of all kinds of minerals and metals. We, Pancon, are hunting for gold and copper at a former producing gold mine near a current producing gold mine called Hale. And so today we're going to talk about our story. It's very exciting. We feel we have a first mover advantage here in this region of the southeastern U.S. It's a very pro-mining area with lots and lots of potential, underexplored, great infrastructure, and so on. This cover slide is an aerial view. This is a brownfield project. So the Brewer gold mine produced 178,000 ounces of oxide gold in the 1980s and 90s by a British company. They did a heap leach cyanide operation because they were just going for the oxidized material near the surface. They were surprised when about 30 meters down into that pit. I'm going to do a little bit of drawing while I talk. This here is the old pit, the top part of the old pit that they reclaimed. When they got 30 meters down, they started getting into unoxidized sulfide material that included copper and gold, not just the oxidized gold. So while that was exciting on one hand, it was disappointing because the cyanide heap leach operation, and you can see those heap leach pads. Let me put that back on. Those heap leach pads up here where they were sprinkling cyanide on the stockpiled ore. They weren't able to extract the material from material that was unoxidized. The sulfides didn't work for the heap leach, and they were making sulfuric acid instead of gold. So that was problematic, and they put that stockpiled sulfide ore back into the pit with the waste rock in the mid-1990s. And please remember that. That's an important part of the story. And they put 7 million metric tons of sulfide ore and waste material back here in the reclaimed pit. And then they sealed it. They engineered the reclamation very well, actually. It's very homogeneous in layers. But that exacerbated a pre-existing acid mine drainage or acid rock drainage situation that, the Brewer system, just like the Hale gold mine down the road, 12 kilometers, these were created 550 million years ago. Lots and lots and lots of metals have been put up near the surface of the earth here from a huge volcanic event. And that's what brought the gold and the copper up to the surface in the case of Brewer. But it also means that the rock is very acidic. And it creates acid in the water. And so by reclaiming the material into the pit, the previous operator exacerbated that issue. And then they realized they had to maintain and manage that. They chose not to. They abandoned the site in 1999 and they fled the US, actually, leaving no one to keep tabs on and to maintain and manage that acid mine drainage. Well, that was problematic. And the government took it over, and the government's been spending about $1 million a year through the Superfund mechanism to keep Brewer clean. It's totally under control. There's a passive wastewater treatment plant now on site. It's been going for 20 years without any issues. And it's taking that water and treating it with lime and producing sludge. There's gold in the water. There's copper in the water. There's gold and copper in the sludge. So the site is safe and clean. And because of that, the government wanted to put it back into exploration and maybe mining. A few years ago, they ran a tender process. This is a very pro-mining state in South Carolina. And on the heels of the successful Hale gold mine, which is producing about 150,000 ounces a year, they wanted to get Brewer back in operation. And Pancon, we've been in this area since 2016 with other gold properties around the Brewer called Jefferson. And so we competed and we won that tender. We have a partner called Environmental Risk Transfer from Missouri. And they allowed us to win with our own expertise and the fact that we had surrounded the property with our own land. And so we have the exclusive right to explore and buy this asset if we want to. We've done some work over the past year and a half, and we've had some great results, and we're poised for great big things. So I want to talk about that in this presentation, and now I'm going to get on into it. So we've got a really good team. And I think that's one of our greatest assets, in addition to a great project and a great location. David Harkwell is a strategic advisor. He's the chairman of Franco-Nevada, former CEO of Franco-Nevada, former chair of the World Gold Council, a very seasoned pro in the mining business. He's one of our largest shareholders. He's a great asset to the team. Patrick Quigley, here on the top right of this slide, is our exploration manager. Like me, he lives right here in the Carolinas near the project. He's our hands-on lead geologist, very experienced, and he's doing a fantastic job. We've got Laurie Curtis as a director on the board and a strategic advisor. He's a world-class seasoned geologist and mining executive. He's worked on Bay Street and the finance side as well. Laurie led the company that discovered and developed Tujuh Bukit, which is a similar type of high sulfidation epithermal gold copper system, just like Brewer, in Indonesia. So he's got a lot of experience relevant to the kind of system we're hunting. Again, this is an old system. It's huge. It's a big alteration zone. It's got a big porphyry signature underneath, but it's very old, and it's also complex geology. So it's good to have pros like Laurie and David on the team. Keith Laskowski joined us 3 months ago as a technical advisor. He does work with different companies, primarily Sandstorm Gold, but he also consults on his own, and he's been a great addition to our team. He was here a couple of weeks ago. Dave Mosier is our chair of our board, a co-founder of the company, and also a very experienced geologist. Philip Corrier lives in Charlotte here. He has his own junior mining company called Carolina Mining, also exploring on the exact same rich belt of rocks called the Carolina Slate Belt up in North Carolina. So we've got a huge team, and we're very confident that that's what it's going to take for us to make a big discovery at Brewer. Our capital structure here on the left side of the screen, we've got 1.6 million Canadian dollars as of October 1. We're sitting well. We've got money for our phase 3 drill program. We've already had 2 phases of drilling, which I'll talk about. We've got analyst coverage from Paradigm Capital, independent report from Don Blythe, geologist and analyst, who put out a report in May of this year with a price target at a speculative buy of 45 Canadian cents. Don notably was the first analyst to cover Remarco Resources back in 2008-9 when they had the Hale project, and then they sold it to Oceana Gold, which is now an operator down at Hale. David Talbot, who introduced me here with Red Cloud, is doing some analysis on us, and hopefully there'll be a report out at some point. Share ownership, we've got about 55% of our shares are in hands that we know of and folks that we know well, and high net worth investors and the management, the board, myself, institutions. Our share price and share trading volume has been performing pretty well over the past year, despite some market headwinds. I think we're very well positioned in the market. These are some key headlines here. I've touched on some of these points. We're a brownfield project, a past producer. We're 12 kilometers from Hale, which produced 150,000 ounces of gold last year. Excellent access to infrastructure, highways, power, gas, railways, labor, suppliers. There's been no exploration here since 1997. We're funded for a phase 3 drill program in 2022. We've got strong government support and local community support, and we control 3,000 acres, 2,000 where the Brewer project is and the property, and then 1,000 acres of the Brewer property and 2,000 acres surrounding the Brewer property. I've talked about our regional upside, our first mover advantage here in the very prolific Carolina Slate Belt. You see here the southeastern U.S., Georgia, South Carolina, North Carolina. Brewers right here, this gold star next to Hale, down the road from Ridgeway, which was a Rio Tinto Kennecott operation. Barite Hill down here on the border with Georgia and South Carolina. This red strip is the Carolina Slate Belt, loaded with gold deposits, and in our case, a porphyry system with copper and gold. And the black dots show gold targets, and the gold stars are past and current producing gold mines. So there's been a lot of production here in the past, and we think we're in a great location that's very underexplored. The 2,000 acres of land we control under the name of the Jefferson Gold Project is in the blue here. The 1,000 acres is Brewer. This northeast, southwest is the regional trend on the Carolina Slate Belt. This is the town of Jefferson. It's a very small town, and it's got about 1,600 population, and it was incorporated in 1904 as a mining town. And so folks are very familiar with the mining here. It's a relatively poor economy in this region, in this county. So they're very keen for us to be successful and create jobs and pay taxes. So we've got 3 value drivers, which I'll talk about. They're listed here, but we'll talk about them again. I'll mention them very quickly. We think that the 3 value drivers for shareholders of our company are the ability to quickly remediate that backfill material in the old pits I talked about, which brings cash flow very quickly, reduces or eliminates the historical environmental issue of the acid mine drainage. And it gives you peels back the top layer into what we think is a new deposit of gold and copper right underneath in fresh bedrock. 2 would be to develop a maiden gold resource below that former mine, and maybe nearby too. We think that there's potential extension or additional mineralized bodies around the former mine. And 3 is use all of the data and the compilation of the data we've done and our conceptual discovery model to discover a porphyry copper gold system, a big deposit that we think lurks underneath. We need to find it, but we think that would really be a powerful value driver in addition to the first 2. Conceptually, if you look at a martini cocktail glass, it helps you understand a little bit about a high sulphidation epithermal system like Brewer that we're going for here. You can see the stem of the glass here, and think of a big volcanic heat engine driving up fluidized rock with gold and copper in it up into this glass here and filling that glass with liquid. The olives represent hot zones or high-grade concentrated clusters of gold and copper, which oftentimes that's what you're going to see in systems like this, where they occur in clusters or telescope fingers or multiple lenses. And then a very wide alteration zone at surface, which is exactly what we're seeing at Brewer. So Brewer's got all of the characteristics and the hallmarks of a big system with an underlying porphyry engine. We know there's gold at the surface. It's oxidized because it's been mined. We know there's unoxidized gold and copper in the sulfide zone right below because we ourselves have been finding that in our drill program. And we have evidence to suggest that there's something much bigger underneath with that porphyry potential. So here's a cartoon on the right side of the screen, again, showing that kind of big driving heat engine underneath, pushing up sometimes in like fingers or telescopes up into an elevated topography there. This high sulphidation epithermal system. This is kind of what we're looking at Brewer as our model. Down the road, you'll see Hale. Hale does not have copper. It's different in some ways. It's similar in other ways. We do believe, we know Hale was created 550 million years ago, just like Brewer, when this was an island arc somewhere way off in probably the North Atlantic before these continents were made here in the Carolinas, and the mountain building occurred. And there was a lot of metamorphosis and other thrusting and faulting. But we think that Hale was created from the same big event and big system that brought up Brewer mineralization. If we look at analogs, similar types of systems in the world today, there's 2 operating mines that come to mind, Timok in Serbia and Tujuh Bukit in Indonesia. They both are similar in that they have upper zones of mineralization, and in this case, upper mines, upper open pit mines, and lower zones of mineralization. In the case of Timok in Serbia, you've got an open pit mine and an underground mine in the same system with significant volume of copper and gold, large deposits in both cases. We think that Brewer has the potential for the same type of upper zone and lower zone potential. So here's what we've done. In January of 2020, we were told that we won this competitive tender. We outbid other companies, bigger companies than us. We're very excited about that. We think it speaks to our team and our potential for success. We raised capital right before COVID. We did some geophysics. We did some shallow rotary air blast or RAB drilling. We did some sonic drilling, and we started some core diamond drilling in November. The geophysics helped us vector in on some drill targets. We used gravity, ground magnetics, and resistivity IP. You can see here on this left panel some of the results from the RAB drilling overlaid on those north-south resistivity IP lines. The RAB drilling just goes down about 60 to 70 feet, 20 to 30 meters down under the surface. And it gives you a sense not just of what gold and copper is there, and you can see from the legend that there was a lot of good anomalous gold grades virtually in every single hole. So there's anomalous gold everywhere here near surface. But it also gave us a very helpful geochemical understanding of what's in the rocks. What are the minerals and the elements that are here? And that is very helpful in understanding the bigger system, the structure, the geometry, the controls, the shape of whatever deposit may be yet to be discovered, or deposits, as the case may be. So that led to our drilling, phase 1 diamond drilling. We drilled 7 holes starting last November until this March. We drilled another 10 holes this past spring and summer in phase 2. We're getting ready for phase 3 next year. We have funding for that. The results have been excellent. They've been exciting. We've seen very, very good intervals. I'll get to that in a minute, of gold and copper extending below the former mine. We've also seen, in the case of hole 15, 150 meters south of the mine, a very good intercept of gold and copper in a place where no one has drilled before at that depth, and no one has found anything near surface of interest. So we've sort of possibly opened up a new zone of mineralization. It could be a new deposit, in addition to what we think is a deposit of at least 400,000, maybe more ounces of gold equivalent below the former mine. We've also drilled these sonic holes through the former backfill. I told you about the reclaimed sulfide ore in the waste rock. And we've been very excited about the gold content we see there, which is that first value driver I talked about. This summer, we did another round of 104 shallow RAB holes. You can see those yellow dots here. When we expect those results to be released sometime in December, in addition to the final 2 results from the phase 2 diamond drilling, holes 16 and 17. Labs have been slow with results this year for all companies like us. We've been struggling with that, but it's actually been good for us because it's allowed us to compile so much data that we've been producing into this geologic compilation of this discovery model I talked about. And speaking of using data for discovery and for good exploration, we took 48,000 historic blast hole assays from when this was a mine in the 80s and 90s, when they had to blast down in that shallow 65-meter deep open pit here. You can see on the right side a cross-section looking west of that former mine, and we recreated what the gold mineralization looked like, that oxide gold in the surface here. And the red is the higher grade, and the pink and the red and the yellow shows some higher grades. And this gives us a sense of shape and direction and dip and control and geometry of what that former mined ore body looked like. And you can see here from a phase 1 drilling, this is what the gold values of our holes 4 and 5, these vertical holes that went below the mine. Very good gold grades and some visible gold here. We've got photos of that in our appendix, which we can show you. On the left here is an aerial or plan view of that same blast hole compilation model. So this sort of shows a northwest-southeast trend of the mineralization, which is exactly perpendicular to that broader regional southwest to northeast trend on the Carolina Slate Belt. So that's been very helpful information to help us target our drill holes for our phase 1 and phase 2 diamond drilling. So speaking of that, here are some highlights from that drilling. There's a lot of information on this slide. You can see these little boxes here correspond to some holes. You can see the white outline here. Here, I'll just turn on my little pencil. This is the former main pit. This is a little ancillary pit called the Northwest Trend, and this is an ancillary pit called the B6. In total, there were 3 shallow pits, but we just refer to it as the former mine. And you can see that there are, in the blue, white, and yellow dots, these are all diamond drill holes. Some of these were angled holes. Many of them were vertical holes. And the ones in the pit within this white circle boundary were started off as sonic drill holes to go through that backfill material because we wanted high quality samples to understand the gold content in that top layer. And then diamond drill holes below those. So hole 4, which is located right here. Well, let me put this on. This is hole 4. I'm not really able to draw it, but it's right here in the middle of the circle there, middle of the pit. Hole 4 returned 115 meters of 0.91 gold and 0.17 copper, including 15 meters of 2.35 gold and 0.46 copper, and 3.45 meters of 5 grams gold and 1.2% copper. With the gold equivalent values, these are very compelling. Hole 5 is located actually north 110 meters of hole 4. 181 meters of 1.2 grams gold and 0.27% copper. These are phenomenal results, and 110 meters apart on a north-south fence is very compelling for a maiden drill program on a project like this. If you go south from hole 5, 50 meters, you get to hole 8, 106 meters of 1 gram gold and 0.26% copper. You keep going south, hole 9 shows 16 meters of 1 gram gold, hole 10, 12 meters of 2 grams gold. Now, what gets interesting is because all of those holes I just mentioned are below the former mine. And if you look back previously to this blast hole model, you can see what we were doing. We were going below and we were getting very good drill results. But with hole 15, we stepped out to the south where no one had drilled at depth, and we got some excellent results. We got 62 meters of 1 gram gold and 0.15% copper, including 21 meters of 2 grams gold and 0.36% copper. This is just outstanding, and it's exciting. It could be a new zone of mineralization. It could be a new mineralized breccia body. It could be an extension of the known mineralized breccia body that's been mined in the past at the former mine. So to help explain that more, here's another cross section looking west. North is to the right, south is to the left, and you can see here in these sort of light colored gray lines, these are historic drill holes. There's been about 1,000 shallow drill holes, none of which went more than 30, 40 meters, if you can imagine. Because again, they were just going for that top layer, that top oxide layer of gold. So they didn't go very deep. And that's what we're doing. We're going under the old mine, and you can see in these colors here, the legend is here, gold on the left, copper on the right. We're getting great results below the mine. And down here to the south, this hole 15, we got some more really good results. So this is what we want. We want to see, this is this upper zone I was talking about with this high sulphidation epithermal model we're talking about using Timok in Serbia and Tujuh Bukit in Indonesia as 2 analogs. You see an upper zone, and with the porphyry signature, which is evident with the alteration zone and other mineralogy and geochemistry that we know about, that we think there could be a lower zone, a much larger copper gold deposit. And that's our third value driver in this story. Here's another cross section looking west, but this one is 50 meters east of the one I just showed on this slide. So we're getting a little bit of depth here. We're getting some 3-dimensionality by looking at different slices on this cross section view. And here you can see hole 10 is on that slice and on hole 15 to the south. So you're seeing again here mineralization below the former mine. Even hole 2, which was an angle hold collared to the north of the old mine, showed some good mineralization, almost 14 meters, 0.85 grams per ton gold. And then in hole 10, there was mineralization again at depth. So there's continuity going down. All of this bodes well for a resource, a maiden resource that could be a mine in the future. So I want to talk about that first value driver. This is monetizing the waste in the old pit, the backfill material. It's reducing, if not eliminating, the environmental issue of the rock acid mine drainage, and it's creating a top layer, removing the overburden, if you will, or removing the strip ratio, reducing the strip ratio to get at a new deposit that we might want to mine in the future if we can prove up a maiden resource there. So in these 6 sonic drill holes that we drilled on the top of other holes that went vertical below the mine, we averaged 0.35 grams per ton gold. Now, independent analysts, very informally, have suggested there's about 90,000 ounces of gold in that former mine, in that former backfill material, and maybe 400,000 or so ounces just based on the drilling to date. We've only drilled 17 holes, but that's starting to paint a pretty nice picture in a very early program so far, and that gives us a lot of encouragement. So this is another slide talking about the value in remediating that backfill waste. It's that first value driver that I've been talking about. So this is where we are right now. We're not drilling right now because we're trying to refresh our geologic model. There's a lot of work to be done, geological, geochemical, mineralogical. We're updating our regional maps, and we're doing a whole bunch of work right now. So I'm going to go through that, what we're doing and how that leads to our phase 3 drill program. We just completed at the end of November a regional geophysical compilation. So that's very helpful to understand the big picture. Again, these are very big systems. They're on a belt. There's context here. You want to be able to zoom out before you zoom in. And so that's what we've done with that. At the end of Q4, we've got some deliverables here. You can see on this slide, assay and geochemistry results. We're going to update the database of all that and help integrate that data. Petrography, we're looking at thin sections to help better understand mineralogy and paragenesis at the mine. And geologic mapping, we're expecting to complete both micro scale and macro scale maps of the Brewer mine property and the larger footprint that we control with the Jefferson project, again, that I talked about, 2,000 acres surrounding Brewer. Also at the end of Q4, we expect upgraded grade shells, looking at that assay and geochemistry data from the past and our own, and that will help us with phase 3 drill plans. In Q1, we're going to do shortwave infrared spectral analyses so we better understand mineralogy using state-of-the-art technology from TerraSpec. We're going to complete downhole televiewer surveys, which gives us high-resolution photography, 360 degrees around in the inside of the hole, which helps with better understanding controls and structure. And phase 2 geophysics we plan to do to map the subsurface and identify drill targets. We're looking at a couple of geophysical techniques right now. And then in Q1, we're going to plan another round of drilling. So we've got a lot on deck. The team is very busy. It's a great time of year to be doing this kind of work here. We can work year round here. And I'll just finish up the last slide in the main deck with the three value drivers. One, we're going to quickly remediate that waste and monetize the gold. That's going to help us reduce the environmental management profile here and the risk profile here, and give us a peel back the layer to hopefully a new deposit, which is value driver number 2, maiden resource below and near the former mine. And number 3 is we want to discover a large copper gold porphyry using our data and our team's expertise. In 2022, we're going to deliver an updated discovery model. We're going to work with our partners Environmental Risk Transfer on completing due diligence for a remediation plan, which will lead to us to make an executive investment decision on buying this from the government. And I can talk about that as well. And we're going to continue drilling with phase 3, which we're funded for, to build on our results to date. So that is it for now. I'm going to take a pause for some questions. It's at the bottom of the hour. I've got more slides in the appendix here, but I'll pause for some questions, David, and then we'll see where that goes.
Great. Thank you very much, Leighton. Great presentation as always. So now we're going to kick off the Q&A portion of the webinar. So a reminder to everybody, please go ahead and type your questions into the chat box, and we'll get to as many as we can. So Leighton, does the Brewer asset have any similarities to the nearby Hale mine that can help you target additional gold mineralization, help you explore this thing?
Yes, David, it does. I'm just scrolling right back one by one, so I can show you. I want to go back to that cartoon showing the high sulfidation epithermal system sort of model that we're looking at. It's just taking a sec here. There it is. So you can see, we see Hale as being a low sulfidation epithermal system and Brewer being a high sulfidation epithermal system. So in that sense, I think there's some similarities. I mean, the epithermal part of it, at least. We do think that Hale was formed maybe very much from the exact same mineralizing event that created Brewer 550 million years ago. So they're similar in the sense that I think of them as maybe fraternal twins. They're not identical, but they were born at the same time. But there are some real differences. To our knowledge, Hale does not have copper. To our knowledge, Hale does not have a lot of topaz. Brewer has a whole lot of topaz. And that's encouraging in many ways because it's often associated with where we're seeing the gold, we're seeing the topaz. Also, we know that topaz is a very hard mineral and it's created at very high temperatures. So it kind of corroborates that there was a very extreme heat event here that often is associated with porphyries. And Hale doesn't seem to have that kind of signature that we have. So there's some similarities and there's differences. But let me just say this. Hale's got what we know, I think 4.3 million ounces in resources and reserves of gold. That's a lot. That's a significant gold deposit. They're still exploring. They're currently an open pit mine, but they've announced that they're going to go underground and they've already applied for permits and they're starting to develop that underground mine. In fact, I've been there and I've seen it. So to think that our neighbor that was created at the same time, maybe from the same system, has got at least 4 million plus ounces of gold and probably a pretty long mine life ahead of it with a lot more exploration potential is quite encouraging. Because if the mother of both systems is right under our feet, that suggests that there's a lot of potential for us at Brewer.
Okay, so they have epithermal gold mineralization. You seem to have epithermal gold and copper mineralization. Is this porphyry style mineralization important to the story? Is that what you're really looking for to sort of enhance a world-class deposit?
For this to be a world-class deposit, which we think it can very well be, then yes, that's exactly where this story goes. But we're taking a very data-driven, systematic approach. So we're starting with more knowns than unknowns, and those are leading to a bigger picture. So you can see what we've done. We started with data compilation, geophysics, shallow drilling, deeper drilling, ongoing analysis of different types of mineralogy and geochemistry. As we do that, two things are happening. We're finding gold in the old waste reclaimed material. We're finding new, fresh gold and copper in our drilling. But we're starting to see more and more evidence of a porphyry system. And this is not only from our team, but from independent geologists. We have a couple of companies under confidentiality agreement in our data room. They came to us. They see the world-class large porphyry potential here, and they seem to be very interested. And I think usually you don't see bigger companies coming to smaller companies for getting into the weeds with looking into our data, making site visits down here, unless they didn't think something big was here. So all of that suggests that there is potential for something very, very big, tier one, world-class asset.
Right, and you're drilling below the pit. That's returned some pretty wide, very wide gold intercepts. But there are some higher grade intervals within that, and they may or may not correlate horizontally between drill holes. But is this something you're going to now focus on with upcoming drilling? Are you going to pop some more holes below the existing pit?
Yes, David, thank you. Great question. I'm pulling up this slide here just to help talk about that. This is one of those cross sections that I was speaking to. So what we do plan in our next round of drilling is to continue to understand the continuity of the mineralization below the pit that you referred to. But that's not the only thing we're going to do. We really do feel more and more confident about stepping out. And by stepping out, I mean building on our success at hole 15, which again is in a completely new area. This could be a totally new deposit south of the old mine. It could be connected to the deposit under the mine if there is one, or the mineralization at least that we're finding under the mine. Also to the west, I want to show this slide here that shows, if you look on the right panel here, the right side panel, these are the shallow rab drill holes that we drilled this past summer. And we're going to put out these results in December here. They're very encouraging, and we're seeing a lot of potential in the west. If you look just to the west of the old mine there, I'll try to turn on my little pointer here. Right here, this is called the Western Target Zone. And even back in the 80s when they were mining here, the oxide, the heap leach operation, they actually sited their heap leach plant and the leach pads right here where my circle is. But that's also a Western Target Zone where geologists think there's potentially another mineralized breccia body. So David, to your question, our upcoming drill program is going to test targets underneath the old mine, to the south of the old mine, to the west of the old mine, and also to the north and the east. So it's open in all directions. And we do have reason to believe, based on our analysis, that the system may be tilted and tilted to its side. If you can see my arm, it may be laid on its side. We're going to be testing that hypothesis. and maybe drilling some deeper holes, perhaps to the north, looking for the roots of that system. Because if it is tilted on its side, those roots may have been elevated. So there's a lot of things we're looking at. And again, the time we're taking now to update this geologic model, this discovery model, is really designed to make sure that the drill targets for phase 3 are high quality and they're spot on.
Right, right. And you did mention hole 15 there a second ago. That's a pretty big step out to the south of the pit. You hit some nice copper, some nice gold grades. Is that something you were expecting? Why wasn't that found before?
Well, that's an excellent question. We thought there might be some potential there given our geophysics, because there was a geophysical IP anomaly there. But if I'm going back to this cross section here, the drilling that was done here at hole 15, I'm going to circle. This is where I'm talking about. Oh, shucks. Trying to get that pointer to work. It's not working. Anyway, you can see here on the left side of the diagram that there is a hole 15. The historic drilling only went down 30 meters. So no one had tested below that because no one was looking for the unoxidized sulfide zone. So we did have some reason to believe there was potential, but I think we were very pleasantly surprised with the results. And if you look at those results, I'm going now to the slide here that shows more specifics about it. And you're seeing, 21 meters of 2 grams and 8.5 meters of 3 grams gold and some good copper. So we were pleasantly surprised with 15, and we're going to follow up on that because we do think this could very well be another potential zone of mineralization and maybe a separate deposit, a separate lens or a separate feeder zone coming in from below from that porphyry engine.
Right, and that's in a different rock type, right? That's how important is that?
Well, the lithology is very important, and it does look to be like a different rock type. There's a big east-west fault zone just on the southern border of the main pit there. You can see that the way the southern part of the pit, it kind of goes horizontally across the screen there, east to west, and we believe that there's a big fault zone there. And so there could be, a different rock type lithological package down south of that. And we're going to be further testing that hypothesis as well.
Right. Okay, great. Moving on a little bit, assays certainly have been an issue for the industry, getting them back in a timely manner. And it probably gets worse when programs like this send an awful lot of short drill holes to the labs. Now, I believe you did mention this, but when should we expect the final RAB holes? I think you've got 104 holes out there, and then the two final diamond drill holes. When should we expect assays?
Thanks, David. Yeah, it's been hard for all companies this year. All companies that have been drilling, labs have been, I think, doing their best. Excuse me. But it's just been really, really, really slow on an unprecedented level. So a couple of weeks ago, people following our company will know that we put out a news release, with results from some of the more recent holes up through hole 15. And we still have to report on diamond holes 16 and 17 and all of those 104 RAB holes. We plan to release that in this month of December. So look out for that. The results are trickling in, but we think we're almost there. And so then that will include results in the public domain for all of our phase 1 and phase 2 RAB drilling and our phase 1 and phase 2 diamond drilling, and of course our 6 sonic holes. So that sets us up nicely for 2022 for phase 3 drilling. But so that's, we're looking in putting those results out by the end of this month.
Okay, so those are coming shortly. Now, you did pause the drilling for a while, waiting for those assays. Would you simply restart the drilling in the new year, or do you need some time to digest those results?
Well, I mentioned earlier in this presentation, and I'll try to find those slides, we're doing a ton of work right now. Just because we're not drilling doesn't mean that we're not doing anything. And there's so much other complementary work that needs to be done on a project like this to better understand the bigger picture and to vector in for both upper zone and lower zone targets. So here you can see, we're working on assay and geochemistry results, petrography, geologic mapping. We're updating grade shells. We're doing spectral analysis for mineralogy. We're doing downhole televiewer surveys, and we plan to do another round of geophysics. So again, of course, time is always of the essence, but the last thing you want to do in a program like this is rush and get over your ski tips, if you will. So I don't want to start drilling again until we really feel good about all of the data that's coming in. And quite honestly, the same kinds of delays with supply chain and labor issues that we're seeing with labs is also impacting, we're doing that spectral analysis and the televiewer surveys ourselves, but it needs equipment. And we've seen some real significant delays in just being able to get our hands on the equipment. So I'm not making excuses here, but look, the supply chain is jammed up in every direction. And so it's taking longer to do these things than we had hoped. So that's why we're saying in Q1, we're going to get this stuff done. And as soon as we do, then we will start drilling. We don't have an immediate start date for drilling right now because we really insist on getting all of our ducks in a row, all of our data together and compiled, because we've got so many smart people on the team that it would be foolish not to take advantage of their brain power before we start drilling again.
Right. Okay. Let's discuss the minerals in the pit for a little bit. Do you have an early indication on the value of that rock in the existing pit, and how uniform do you believe that waste rock and leach pad material and whatever else might be in there is?
Well, like I've said, if you look on this slide here, the average of these 6 holes, and these holes we do believe are a representative sample of the whole pit because of the very well-engineered and homogeneous nature of the reclamation engineering that was done by the previous operator when they refilled and reclaimed that backfill pit. So 0.35 grams per ton gold. We've had more than one independent analyst tell us, again, informally, this is not sort of on the record, but they've told us that based, on their calculations, that there's around 90,000 ounces of gold in that pit. We are, as we speak, we are working with our partners, ERT, Environmental Risk Transfer. We are just now sending them samples. It's taken a while to get this going, but we're sending them samples. They're doing the test work. They're doing cyanide leach testing. They're doing hydrometallurgical testing, because we've got to understand the recovery ability of that backfill material. But even if it's 80% of 90,000 ounces of gold in waste rock, which what we understand is you don't need a mining permit to remediate the waste, which means you can get at that cash very quickly, which is exciting in the mining business. It's not that common. So we think that there's a lot of economic potential in removing the waste, but we also think that when those previous folks put that material back in, it actually supercharged the acid mine drainage problem. It actually exacerbated an historic naturally occurring situation that then led to this being considered a Superfund site. So we might be able to de-risk the entire environmental profile of this project by monetizing the waste. And that's just a beautiful win-win. And if we can prove a deposit of 500,000, 1 million, 2 million ounces of gold equivalent underneath and around, then you've just reduced your strip ratio and thus your operating costs to get at that new deposit underneath the old mine. So that's really what that's about. And we're going to get some information soon. Our partners are working hard now. We're working with them. We're working with SGS Lab and ALS Lab and McClellan Lab in Nevada. And so we hope to have some good news on that in the new year.
Right. And would you complete a resource on this in-pit material? I think if you do want to toll mill this, you would easily need something to reconcile with.
Yeah, I do think that producing a resource is going to be the way to go here. The question is, how much more drilling is required? This is loose material. This is why we chose the sonic drilling method. It's very different than diamond drilling, but you get very high quality samples back. So whether we need to drill more to prove a resource or not is yet to be determined. But we feel very confident about the quality and the quantity of the data we have to date. So I think we're probably pretty close to doing that.
Right. And what might your production options be for processing that material?
Well, right now there is no processing equipment at site. Obviously, this is a brownfield site, but everything was decommissioned when the previous operator left. There is an operating gold mine called Hale down the road, which we've talked about. That's a big project. We have good relationship with them. There could be some synergies there for processing. We have a great partner with ERT, and they have a sister company called Missouri Cobalt that has a hydrometallurgical refinery in Missouri, where there's also a concentrator. So I think there's a lot of optionality here when it comes to downstream processing and refining. There's a possibility that we would put a concentrator at Brewer and then ship concentrate to a refinery either nearby or somewhere in the region. or we do everything on site. Again, because this is a brownfield site, we have all the power we need. A big substation was built right next to our site back in the 80s. We have all the water we need. So the infrastructure is ready to go. We just need to do a little more drilling and better understand the economics before we put together kind of the fulsome package of downstream processing.
Right. Okay. And can you enlighten us on Pancon's environmental liabilities? You know, is environmental risk transfer the company that's on the hook for the current cleanup, or should we really think of this as being sort of tied into your option agreement and you're working together?
Well, we are working together, but I do want to emphasize, I'm going down to the appendix, and there is a slide here on our option agreement and on our partner. I would alert everyone, this presentation is on our website, ERT. So ERT is an extraordinarily unique company, and they're the best at what they do. They have a niche. They're starting to work more and more around the world. They're based in the U.S. They own Superfund sites. They own abandoned, contaminated industrial sites, power plants, chemical plants, mines. So they specialize in owning risk, environmental risk. So that's why we brought them on. And so automatically, by having them on our team, the historic environmental risk at Brewer is 100% going to be owned by them. Now, that comes with them also playing a key role in the project. So I've got up on the screen here a slide talking about our option agreement. So the way this is structured with the government and the receiver who represents the government with whom we have an option, and we have a little less than 2 years left on that option to make a decision. If we were to buy this, we would need to pay the purchase price, which is yet to be determined, but we estimate it'll be somewhere more or less around 30 million US dollars. That money would go into an environmental bond, like in an escrow account, that would be controlled by our partner, not by the government. And they would use that to then cover any of the historic environmental risk management. And they would be responsible for managing all the historic environmental risk. But that would be the purchase price, the first part of the purchase price. The second part of the purchase price, as per our option agreement, is that after there's a new operation generating cash flow, a new mining operation generating cash flow, then we would pay back half of the past costs that the government spent, that we estimate it'll probably be a total of about $15 million. That would constitute half of the past costs that the government spent to keep this site clean. And that would be paid out over 10 years based on future cash flows. So those are the two components of what the option agreement says should be the purchase price. And then ERT, our partner, would take title to the land. We would have an exclusive mining lease, long-term mining lease with ERT. So we would be the operator. We would control 100% of the project, and we would have zero environmental liability vis-a-vis the past. Of course, any environmental issues from now going forward would be ours as the operator.
Right. Okay, great. Thank you. Maybe a couple more questions before we wrap it up for today. Have you started to consider more regional exploration drilling now that the geophysics has been completed?
Well, we are understanding more and more from mapping, geophysics, mineralogy, spectral work that we've talked about, the Jefferson Project. And the Jefferson Project, again, is this 2,000 acres wrapped around surrounding the Brewer property. We do plan to drill on the Jefferson Project in our future drill programs because we do think this is a very large system that extends possibly in all directions. We do think clearly there's this southwest to northeast trend. We know of a target to the northeast. We know of a gold target to the southwest. So we do have our eyes on regional opportunities for sure.
Okay, and do you think it'll be easy to get social license for drilling outside the Brewer mine itself? I imagine there's a lot of surface rights owners you must deal with.
Well, absolutely. Again, Pancon has been in this area in Chesterfield County, South Carolina, since 2016, so more than 5 years. And we take the local relationships that we've been building and managing very, very seriously. And that's bode well for us. I think that's one reason we won the tender 2 years ago, is because we are local and we're locally present. We have good trust and reputation with the local community and the local government for that matter. Now, again, this Jefferson Project I'm talking about with the 2,000 acres, we have all the mineral rights for that 2,000 acres. So there's no issue in drilling. You don't need special permits like you would out in Nevada with this federally owned land in the US. It's very easy, in fact, to drill. So there's no issues with that. Now, picking up new land, that's certainly a part of our strategy and part of our plan. But that will require negotiating new lease agreements with landowners. The good news is we know most of the people that own most of the land in this area. So it's just a matter of us sitting down and negotiating those deals.
Great. Okay. Well, why don't we leave it there? So thank you very much, Leighton from Pancon Resources, for speaking to us today.
Thank you, David. Again, we plan to get the drill bit turning again in Q1 of 2022. We plan to have some news in Q1 about our new compilation and our discovery model, and look out for some results later this month to wrap up phase 2 drilling.
Great. Looking forward to those events. So thank you very much. Thank you, everybody, for tuning in. Reminder, the Red Cloud Securities will be back on Monday afternoon when Tim Lee sits down with Tempest Resources. So that's December 13th at 2 p.m. Eastern. So have a great day, everyone. Thank you.